Do it.
Okay. Next up is Fishers. I'll let you take this one, Chris. This is normally yours.
Yeah, here we go. All right, Fishers. I love this market. Everyone knows I love this market. The ability to find good quality applicants, the least amount of turnover, and without a doubt, the least turnover costs in this area. It directly reflecting your quality of tenants. Active homes in the market, 108 active homes, which is pretty consistent with what we've been seeing. Somewhere hovering around 100 homes active at one time is pretty consistent. And then the average rents. Now, this speaks to exactly what I feel in real time. We are expecting average rents to decrease. Down 2% probably speaks more to seasonality than it does than to the overall market changes that I'm feeling. If you've watched any of the previous market reports, you'll hear me talk a lot about what I feel is a correction coming to the overall real estate market, and specifically our rental market that we're currently a part of. But and then the average days on rent. Go ahead.
Look at the preview of November. I mean,
there you go.
It's gonna go down next month for sure.
There you go. I'm glad you pointed that out. Yeah, down 3% month over month speaks more to seasonality, but look at that curve as it continues to decrease in our sneak peek into November. Now that speaks to in my opinion, to a little bit more of a correction in the market when you're seeing that steep of a decline in the average rents. And then the average days on market, without a doubt, and let me say, if you're not paying attention to our previous market reports, you've got to get in tune with these. You've got to you've got to subscribe. This market you have to be in tune with, certainly if you already have an investment property in any of these markets. Average days on market up 20%. That's absolutely what we're seeing. In a lot of these markets, certainly even in the Indianapolis market, although we did see a little bit of a downtick, a little confused by that, but 20% increase is absolutely what we're seeing, and I would absolutely expect that to increase on the market reports coming over the next couple of months, let alone the seasonality, right? I don't want to lose track that this is pretty much the norm just based on seasonality alone. So
yeah, I think just to echo that, Chris, it's so important to stay on top of this, especially now. I mean, real estate's always fluctuating, it's always changing, but I feel like right now we're even in more of a tumultuous environment where we don't know what's going on. It's changing day by day. And so just to stay on top of this, to try to get ahead of this, if you have a vacant home right now, I mean, it's looking like market rents are going to go down. So if I had a vacant home, I would be trying to secure a renter as quickly as possible, maybe taking some price reductions, making some concessions that I maybe wouldn't normally make, because I feel like if you can secure somebody at that $2,000 range right now, if you were talking about in February, that might be $1,900 or something like that. So I would say do what you need to do to get it done now, especially while it's still relatively warm out. We're not into the thick of winter.
Exactly. Yes. There's no better Christmas present rather than placing a tenant ahead of Christmas. So you've got to be in tune with that. If you're with another property management company, you've got to make sure they are in tune with the day-to-day traffic that you're seeing on your property that's on the market. You need to know how many clicks you're getting, how many showings certainly that you're getting on the property. And if that number is 0, you should not be looking at a $50 price. You need to be looking at $100, $150 minimum price reduction, make an impact. Place a tenant. That's the best advice I think that we can give you right now. And it's not all doom and gloom. I mean, there's going to be a lot of uptick we're going to see, I think, in the latter part of maybe the third, fourth quarter of 2024. But right now, we're looking in real time. It's important to place a tenant. And it's holiday season.
100%. Well, and we've had a huge run up in prices over the last year or two, right? So if you got in before that, you got in for the wild ride. You were able to take advantage of those, but we just want to report what's happening right now, and there is a correction happening. And so, we are hounding our owners of vacant properties to take price reductions, do what we can to get these listed, because we are on top of the market. We know what's happening, and we can kind of see into the future a little bit. You know what I mean? To a certain extent. So that's why we try to stay educated like this, so we can educate our owners to get their places or get their homes leased up.
Exactly. Yeah. Well, let's take a quick look over at the sales price here before we jump over to the next slides.
Yep.
So average home sales. So hopefully we don't have to repeat this on everyone, but this is what we consider the investor point of view. Homes that are going to sell under the $500,000 price point. So those are averaging out about 361, near the 362. Now, what is also really awesome about this market, it doesn't surprise me. There's a lot of new construction going on in all of these submarkets, right? So number of homes sold, 74, and that's up almost 4% month over month. So that's awesome. That's great. The sales market's still holding strong in this market, but that's probably going to result in a higher inventory, which is also going to kind of reflect in some of those other numbers we were talking about earlier. But that's great for this current market, still continuing to hold on even as we feel the effects of seasonality.
Absolutely. And I mean, I think, this is more than Indy, but I mean, if you take a look at this from a nationwide point of view, I mean, 360 is still super, super affordable. Compare that to California or Arizona or something like that. And Fishers is like a top tier market. It is an amazing market. It's got great schools. It's going to have great resale value. You're going to attract really high quality tenants. So to get that for 360, well, that seems like a lot compared to Indy,
Absolutely, yes. And you got to keep in mind your turnover costs. And you're going to hear me say this a lot as we continue on with these market reports. Your turnover costs are going to be much, much lower in these areas due to your quality of tenants, primarily driven by the school systems in this area. So that's important to keep in mind.
Cool.